What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol NVAX for Novavax Inc. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. We have already marked this chart up, but I want to start from scratch, especially noting that we got an earnings announcement after the bell today. So let's go ahead and flip on the extended hours session and see what's going on with the numbers. So zooming in a bit, you can certainly see a bit of bullish activity here. So certainly getting some lift and then sideways consolidation, aka price acceptance at and around 191. So let's go ahead and mark up the chart now, starting from scratch, noting that the overnight high is here at and around 195 for round number's sake, and we'll say that the anticipated open will be somewhere around 191. Remember that these numbers are subject to change by the time the bell actually rings, but what we're about to discuss is a framework to help us navigate the gap, as opposed to, again, it has to be this number or it has to be that number. Again, adjust accordingly based on tomorrow's actual open. So zooming into the daily time frame chart to talk about this framework now, of course, we have some rules to put into play whenever we're gapping based on an earnings play, based on a catalyst play, you know it. So the first thing you need to consider is always the gap and trap. And what that looks like would be opening here, failing to take out the overnight high, trading back lower through the open, takes us to fill the gap to today's high. Now, essentially, if I go ahead and throw that on as a level, we'll be able to see this visually. That's not necessarily a fantastic trade. Your risk to reward in this instance is not that great. If Thinkorswim would click, there we go. So again, this risk for this reward does not strike me as the best. It's about 1-to-1, maybe even worse than 1-to-1, 0.8-to-1, something like that. So I really wouldn't be aiming for that. I would just be avoiding longs until we fill the gap, see if we can get a gap fill reversal off of 187 and then turn higher, in which case the target would firstly, let's actually be more realistic, firstly be the overnight high, that's at 195 we'll call it, and then the moving averages are tangled up overhead, so critical power lines there, and we're also getting 2 days worth of rejection at and around 200, the nice psychological number. So to me, it makes sense that we kind of stick around in this range, maybe a small fake breakdown, gap fills, reverse out of it, move higher into that 200 psychological, that's where we get resistance, or we go back down into today's range basically and support at the low of today's session, which is here at 175. Now, I could be completely wrong about this. Earnings could totally throw this thing for a loop, so let's go ahead and prepare with a couple of extra levels. Overhead, I would note that this is an important area from the dead cat bounce to 11, and then underneath us, if tomorrow's low actually breaks down, this is kind of your next floor at 160, we'll call it for round number's sake. Are any of those levels in play for tomorrow? Maybe. No one ever knows what's going to happen with earnings, so I would just be prepared and at least know where the resistance is, where the support is, regardless of what direction the move ends up being in. If you enjoyed today's video or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.